Hello again, everyone, and welcome to the webinar Understanding and Anticipating Customs Tariff in Canada. My name is Geneviève Hood, the Vice President of Canadian Customs at Access International, and I am very pleased to welcome you today, March 31st, 2025. So before we dive into today's topic, I want to clarify that this webinar will focus exclusively on imports into Canada. If you are also interested in the US import, we hosted a dedicated webinar on that topic just last Friday, March 28, and it will be available for replay a little bit later this afternoon after this presentation. All our webinars are recorded and are available at any time on our YouTube channel, Access International Inc. And we will post the link to our YouTube channel in this group chat. So today I am joined by Pierre-Marc Gervais, President and CEO of Access International, as well as Abdul Dabou, Business Development Coordinator. And Abdul will be assisting us during the Q&A session following this presentation. So I would like also to take a moment to mention that this year we are very proud to be celebrating Access International's 20th anniversary. Thank you for the trust you've placed in us over those years, and thank you for being here with us today. As for the structure of today's presentation, here's what we have prepared for the next 30 minutes. So we'll do an overview of customs tariff with a focus on those applicable in Canada, the importer's role in customs process, the importance of proper documentation, the different mode of payments for duties and taxes when importing into Canada, and finally, a section on financial security requirements. Afterwards, we'll go over some of the most frequently asked questions we receive from our customers, and then we'll open the floor to your questions. So we encourage you to use the Q&A sections in Team to submit your question. So as you can see, we have a few participants today, so we might not be able to answer all the questions live, but we'll do our best to cover the ones that are most relevant to the broader audience. So let's jump right into the heart of today's topic with our first question. Pierre-Marc, can you explain what tariff duties are?
Certainly, Geneviève. But first, I want to thank you all, our listeners, for being here with us today. So it's a great pleasure also to be here for myself, and I personally welcome all of you. So let's start with the basics. What is a customs tariff? A customs tariff or duty, we can use both terms, is a tax imposed by a country's government when a product is imported into that country. Now, the other thing people want to know is how this tax is calculated. Most often, it is calculated as a percentage of the product's value, which is called an ad valorem tariff. Another method is to calculate as a fixed amount per quantity, which is a specific tariff. We also see sometimes a combination of both. This is what we call a mixed tariff. The tariffs will vary depending on the type of product, the country of origin, and trade agreements such as free trade deals, and there are also some special cases where tariffs can be avoided. Now the question we most often get is who pays the tariff? Generally speaking, it is the importers who are responsible for paying the tariffs. The importer can then decide whether to pass on part or all of the tariffs to the buyers all the way to the final customer.
So more precisely, Pierre-Marc, how would you describe the current situation with this trade war?
I know there's been a lot of confusion because of all the recent changes. We've put together a chart for showing what's currently in effect. The boxes show the tariffs currently applicable on imports into Canada from the United States. That's where most of the recent tariffs are concentrated right now. There are also tariffs on Chinese products not shown in the chart. These tariffs were added back in October 2024, for example, on electric vehicles. In response to that, China recently imposed countermeasures on Canadian products such as pork, seafood, and canola. These are the tariffs that we recently heard about that started on March 20th that you can see in the table. So let's say 100% on canola oil and 25% on seafood and pork product. So if we go back to what's currently in effect, what we have is a surtax of 25% on 1,795 tariff lines for products imported into Canada from the US. And when I say from the US, I'm talking about country of origin United States. These lines span many chapters of the customs tariff. It's hard to be more specific without reviewing the list, and these lists are available on the website of the Department of Finance of Canada and also on the Canada Border and Services Agency. But let me give you a few examples of the tariffs where they apply for goods coming into Canada from the US. We have steel from Chapter 72, aluminum from Chapter 76, chickens, live chickens from Chapter 1, the chicken meat from Chapter 2, sorry. We have peaches, the fruit, coming from Chapter 8, soaps coming from Chapter 34, suitcases from Chapter 42, and dresses from Chapter 61. As you can see, it spans a wide range of products. And the key point here, I know I'm repeating myself, but is the origin of the product, not the shipping location. Make sure your documentation is accurate. Geneviève will talk to you about the importance of documentation a little bit later on. And I couldn't conclude this slide without mentioning April 2nd. You've heard about April 2nd, so the date where the United States is supposed to put big tariffs on many, many countries, if not all countries around the world. So there's a lot of buzz around this date, but right now, we don't know what the actions the United States will take. What we do know is that Canada has already prepared its response. The list of targeted products for what we call phase two is even longer and is currently open for consultation. There are 4,416 tariff items that could be affected as soon as the US plans come into force. That's why all the details we'll cover next are so important to help you prepare efficiently. Now, Geneviève, could you share some of the observations that we've made during the first wave of tariffs?
Absolutely. So the first thing to understand, and this is really important, is that the tariff applies at the moment the goods enter Canada. It's not based on when the importer submits documents to the customs broker, nor when the shipment is released. So another key point, unlike the US, Canada allows an exceptions for goods that were already in transit on the day the new tariff came into effect. And so, given how quickly things are changing, it's really important for everybody to understand this nuance. Our second observation is that this is a surtax. It's added on top of existing duties. That's why it's worth taking advantage of free trade agreements whenever possible to avoid stacking tariff. And speaking of trade agreements, the origin of the goods under CUSMA rules remain a key factor here. So let's give you an example. If a product made in France is first imported into the US, then re-exported to Canada without modification, it's still considered a French origin product. The origin doesn't change just because the goods transit through another country. So the proper origin determination is critical here. And finally, we often see confusion around duty relief and drawback programs. Unlike the US, Canada allows the use of these programs even when surtaxes apply. That said, in order to truly benefit from those programs, you need to have a good documentation management in place. Without that, it's easy to miss out on valuable opportunities. So Pierre-Marc, in addition to the pitfall we just identified, we often get questions about how to reduce the impact of the surtax. So in your views, what are the main strategy importers can put in place?
Thank you, Geneviève. And yes, that is a question that we often get because people say, okay, there it is, but what can I do? Well, first of all, it's about analyzing the HS classification. The HS code, the harmonized system, is how your product is classified so that we know what's going to apply as tariffs, duties, or agreements. So in Canada, the surtax applies only to specific tariff lines. If your product can legally be classified under a different tariff line that is not subject to the surtax, then you won't have to pay it. So that's the first thing to look into. Is my product correctly classified? Also, many importers are not aware that special provisions in Chapter 99 can be used to avoid the surtax. The Customs Notice 2510 and 2511 indicate that the surtax does not apply to goods that qualify for classification under tariff items in Chapter 99 of the Customs Tariff Schedule, except for items in Chapter 9966, 9971, and 9989. So if your product meets the criteria using Chapter 99, it means that you won't have to pay the surtax. As an example, some pieces for agricultural machinery in 9903, well, you could use it if your product could be classified in that specific chapter. Finally, another strategy is to review the declared customs value. As we've talked with how we calculate the tariffs, it is based on the value for duty. So in some cases, it might be possible to reduce the declared value, thereby reducing the surtax payable. For instance, certain costs might be deducted. So if you pay 25% surtax on $10,000 instead of $12,000, well, that's a saving of $500 on the surtax and potentially $100 on the GST. So these are ways, strategies that you can use right now to reduce the impact of the surtax when importing goods from the States into Canada. And Genevieve, we've also noticed confusion about identifying the official importer. Can you share our observations at Access?
Yeah, that's a great point. So there's often confusion between the different parties involved in a transaction. Who's the importer? Who's the buyer, the carrier, the exporter? But what really matters is understanding who the official importer is, because that's the party that carries most of the responsibilities. So the importer is the person or company listed in the Canadian Customs documents as being responsible for the import. So this party is responsible for gathering and submitting all the required documents, complying with customs regulation, paying duties and taxes, and having sufficient financial security in place. In some cases, a foreign exporter may choose to handle customs clearance in Canada. In that situation, the exporter becomes a non-resident importer. And this is a common practice and it's completely legal, but it's important to note that the NRI then takes on full responsibility of the import, even if they are not located in Canada. There's also the customs broker, so we are here to support and represent the importer, but does not take over their responsibilities. Also, to benefit from release prior to payment, Canadian importer must have a valid financial security on file. We'll come back to that important financial security a bit later. And they're also responsible for paying duties and taxes via the CARM portal. And yes, we'll cover that also shortly. So I hope this clarified the fact that the importer is not always the buyer and that the importer holds the legal responsibility in the eyes of Canada Customs.
Genevieve, I know that you and your team, you work closely with many of our importer clients, helping them establish solid documentation practices to facilitate imports. Can you explain to your audience why proper documentation is so important and what should be included?
Absolutely. So yes, documentation really is the foundation and it's what allows duties to be calculated correctly. So there are several key pieces of information that must be included on your documentation, such as the classification and the description of the product, is the country of origin, its declared value, customs value, any applicable exceptions, and of course, whether if any trade agreement such as the CUSMA applies. So having a complete and accurate documentation is also the best way to avoid clearance delays. For example, if you need a permit or specific certificates to clear your goods, you must provide them at the time of release. Otherwise, customs will not proceed with the release. But that's not all. Incomplete or not compliant documentation can lead to fines, penalty, and in more serious cases, even a ban on importing your goods into Canada. And also, very important, if customs launch a review or an audit, you will need to be able to prove everything you've declared to customs. So having your paperwork in order makes all the difference. In fact, document must be kept on file for 6 years plus the current year. And let me insist also on a few elements that are too often overlooked. So it is essential to clearly identify the importer of record, the official importer, on the commercial invoice. You must also put on there the customs broker's contact information clearly listed on your document. Ideally, Access International to avoid, but it's really important to avoid confusion, clearance delays, or errors. Finally, make sure that your invoice is clearly indicated whether your CUSMA certificate applies, whether it's for some products or the full shipment. So I would like to share an example of a document that is very helpful for reducing customs duties, the famous CUSMA certificate of origin for the countries of Canada, United States, and Mexico agreement. So first, a quick refresher on this agreement. So CUSMA replaced NAFTA, and it's been in effect since July 2020. The initial duration is for 16 years with a joint review every 6 years by all three countries. And the first review is scheduled for 2026. So any countries may decide to withdraw from the agreement by giving a 6 months notice to the others. As for the certificate of origin per se, it is the exporter's responsibility to determine whether the goods qualified under CUSMA. So once issued, the certificate is shared with the importer, allowing the importer to avoid paying customs duties, which can be a significant advantage. So, however, it's really important to understand that the importer remains responsible for ensuring that the product does or does not qualify under CUSMA based on the agreement's rules. So it is essential to understand the eligibility criteria and to keep proper records. So another point for now is that surtax will apply to U.S. origin goods even if they qualified under CUSMA. You are able to find certificates of origin templates in the client sections of our website, accessinternational.com. So Pierre-Marc, speaking of tariff, can you explain how importers can pay their duties in Canada?
Yes, absolutely. So in Canada, the duties are paid through the CBSA's CARM client portal. This is something, well, new, not so new anymore. So it's launched in October. So since then, this is a preferred method to pay all your duties and taxes. And also, as an importer in Canada, you are required to register for the CARM portal. I mean, you cannot import if you don't register to the portal, so that is mandatory. So once you have access, you can choose from different several payment options, such as you have the credit card options for amounts of $5,000 or less. You can go through online banking. Most banks have as a provider the CBSA. Just make sure you select the right one. You can use the pre-authorized debit, where CBSA will go directly in your bank account and will take out the amount that's required. You can set up recurrent pre-authorized debit or a single pre-authorized debit. It's up to you. And you can go also through electronic data interchange, the EDI, to initiate your payment. The alternative method is to have your customs broker pay on your behalf, and then you reimburse the customs broker. Now, that was the most common method before CARM, but with the new surtaxes that we have and with CARM in place, it is now often much simpler to pay duties directly to the government using the CARM client portal. If you require assistance, we do have on our website many practical guides. We have a full section dedicated to CARM that you can look into, but we also have webinars and capsules on our YouTube channel, so you can go access International Inc. To find us on YouTube and watch our different capsules. And speaking of the CARM portal, at Access, we want to make you aware of the end of two temporary relief measures that are in place. I'll talk about the first one, and Geneviève will explain you the second one. First thing that you need to know is if an importer unintentionally failed to pay outstanding balances, the CBSA had not been applying penalties or interest. Well, as of today, March 31st, this is the last day that this relief applies. It is also your final day to pay your most recent statement of account. As of tomorrow, April 1st, the CBSA may begin issuing penalties and charge interest. I should also clarify that the CBSA has stated that if an importer intentionally delayed payment before April 1st, 2025, they may still be subject to penalties. My advice to you is once this webinar ends, log into your CARM client portal and make sure that all outstanding balances are settled. We also have a video tutorial on our account reconciliation and how to find your balances due. It's all on our YouTube channel. And Geneviève, so can you talk about the second relief measure that's coming to an end?
Of course. The second measure is the end of the transition period for the exception of financial security. But before we get into the details, let's take a moment to explain what is a financial security or a bond, as it's often called in the industry. A financial security is a bit like an insurance policy. It guarantees the payment of duties and taxes to the government, even if the importer fails to meet their obligation. Why is it so important? Because in order to benefit from the program release prior to payment, RPP program, which allows you to receive your goods before paying the duties and taxes, you now need to have this financial security in place in your CARM portal. There are two ways to provide this financial security. You can have a surety bond equal to 50% of your highest monthly accounts receivable, including duties and taxes, with a minimum of $5,000, or post a cash deposit equal to 100% of that same monthly amount. Since the launch of CARM last October, there has been a grace period during which importer could benefit from RPP without having to post a financial security. However, as of May 20th, you will need to have an active financial security for each of your importer accounts. This means that if your company have 3 RM numbers, you will need to have 3 separate bonds. To easily find out the required amount for your business, you can log into your CARM portal, go to the financial information section, and check the financial security number in there. And we all know that the future is unpredictable, and with the surtax and the trade tension on the rise, your calculated bond amount may quickly become insufficient. That's why we strongly recommend that you opt for a slightly higher bond amount. At Access, we simplified things by offering a minimum bond amount of $45,000, which covers up to $90,000 in a month duties and taxes. And due to our volume, the annual costs remain very competitive, often just slightly higher than the one for a basic bond of $5,000, but with more coverage for you. Finally, for small or occasional importer, a cash deposit may be a suitable alternative.
And Geneviève, before we move on to the next slide, I just want to make a precision. So you've seen the date of May 20th. That is the new date that was announced last week. Previously, it was April 19th. Not anymore. May 20th is the new deadline to post your financial security on your profile.
Exactly. Thank you for this precision. And can you explain, Pierre-Marc, why an importer should use a customs broker?
Well, Geneviève, I guess we just made a case for it. So we have, I know I may be preaching to the choir, but a customs broker play a highly strategic role for importers, and especially in today's environment. I don't know if you've noticed, but customs tariffs are constantly changing. More responsibilities are being placed on importers, and also every detail counts when it comes to optimizing cost, timing, and compliance. Why a custom broker? Well, your custom broker has deep expertise in laws and regulations, document preparation and management, but also in representing you before customs authorities. And at Access, we do both sides of the border. We're a Canadian and US customs broker, so we can assist you with your whole transactions on both sides. So yes, you can do a lot on your own as an importer, but it's always better to be supported by experts. And that is what we offer at Access.
So let's move on to the Q&A session. So while you take a moment to prepare your questions, we'll start by going over a few of the most frequently asked questions we received from importers. And I will read the questions for you, Pierre-Marc.
Sure, go ahead.
All right. So how can I determine if my product is affected?
So in Canada, to know if your product is affected, you need to find the HS code, so the 10 digits HS code. There's a classification code of your product. Once you know it, you can go on the website of the Department of Finance of Canada. And again, all the links are going to have them, but if you go there, you're going to have a table with all the products that are affected, and you have a search field. So you can easily search by inputting the HS code, and you'll know if your product is affected or not. That is, if it's coming from the US, of course. Otherwise, you can go look into the tariffs, the tariffs book, and then you can search also by chapter.
Does the 25% tariff applies to all countries or only certain ones?
So now we're talking about importing into Canada. So when you import into Canada, the specific surtax that we're talking about is for products that have United States as the country of origin. Now there are tariffs on other countries, but what we are looking into right now is products that are coming from United States with country of origin United States. So country of origin United States 25% and within the list. Yeah.
Flash quiz here. You should know this answer. So who is responsible for paying customs duties?
Well, I hope our listeners are able to answer that questions now. So it is the official importer in Canada that is responsible to pay the customs duties. Now, this may be your company or your client. It depends on the Incoterm 2020 that you selected. So again, a seller from overseas could act as the importer into Canada if you selected Incoterms such as DDP, meaning delivery duty paid, where the exporter will act also as the importer in Canada and then will be responsible to pay the duties to the Canadian government. So
Are the tariff permanent or temporary?
as of today, March 31st, 2025, no end date has been specified. However, in Canada, as you may know, what we've put in place are retaliatory tariffs. So probably what it means is that if the United States were to remove their tariffs, Canada will probably do the same. So, but we don't have any date right now, and anything's possible.
Are they programs or regimes that allow for the recovery or avoidance of these surtaxes, for example, the drawback or foreign trade zone?
In Canada, and again, I specify in Canada, yes, drawback is permitted. Why I say in Canada? Because in the US, it's different. It's not allowed for the new surtax in the US. But in Canada, you can go with drawback, and remission program also exists for exceptional situations where you can apply for it.
And what are the consequences of errors in customs declaration?
Now it will depend if it's the frequent error or non-frequent error and the severity of it, and now you are responding to it. But most of the time, what we can see are penalties that can be applied, additional duties. If you wrongly declare and new duties should have been paid, then you will be asked to pay them. If the errors are getting serious or repeated, then you can get non-compliance notices, and eventually your right to import into Canada could be suspended or even revoked.
Are there strategies to mitigate the impact of tariff?
Yes, yes, there are. We've talked about some about how to diminish the impact of the surtax, but what you can also do is to analyze the origin of your product. So making sure you select the right country of origin. If your product is shipped from the United States, but it doesn't have United States as country of origin, then the 25% tariff will not apply even if your product is on the list. So that's something critical to look into. Then you can see if you can optimize your supply chain. That could mean looking for other providers, yes, but it's not only that. Sometimes getting the good as unfinished goods, so which just with parts, and you do the assembly in Canada rather than having the whole product shipped, could mean that you'll use different tariff items, and then the surtax might not apply. And again here, if you ship parts instead of finished products, then in some occasion you can get a lower value for duty, which would diminish the impact of the surtax. The other point is to review Incoterms and also responsibilities that you'll share with your partners to make sure that, okay, if the tariffs are there and there are surtaxes, who's going to pay, how the cost is going to be split, who's going to bear the responsibility, and you can't I mean, we cannot predict the future, but you can protect yourself when you have a sales contract. You can put different articles, clauses in it that'll say, okay, well, that's a price escalation clause that will come into effect if tariffs X or Y are applied. So that way you protect yourself and you are not in the void with whatever's going to happen. So you're ready and you know who's going to pay what and who's going to have responsibility for new tariffs.
And how can we prepare for April 2nd?
Well, you're doing already a first step by joining us today with the webinar, but what we can do also is to subscribe to your newsletter and LinkedIn page to stay informed. Why? Well, I mean, you can make all the plans that you want today, but we don't know what April 2nd will be. So the key word for me is agility. You want to remain agile, and the best way to do that is to have information and knowledge. So if stay informed, stay up to date of what's going to happen, make sure you get the information as soon as possible. And to do that, well, register to a newsletter or to a LinkedIn page. What you should also be doing is to have open communication with your carriers because you don't want your goods to move if you don't know what the tariffs are going to be or when they're going to apply. So some people might say, okay, well, I'll wait to see what's going to happen on April 2nd and then I'll make a decision. Do I put on hold some shipments that were supposed to come in or do I let them through? If we cannot fully assess what's going to be the consequences of the tariff, well, I might want to say I'll just take a pause of a few days to make sure I can properly analyze before moving on. So have these open channels with your carriers to avoid any surprises. Documentation, make sure you get all documentation ready, that it is analyzed, that it is reviewed, that the information is accurate. That's going to save you a lot of time and lots of trouble moving forward. And also I've talked about it, but have discussions with buyers always to clarify roles and responsibility.
What kinds of changes to a product makes it Canadian?
That's a great question. So people often want to have products that are certified Canadian because they can use the CUSMA and then they can ship to the United States duty free. As of today, March 31st, if you have a product that is eligible under CUSMA, it can be shipped duty free into the United States, which is like it was before any of these tariffs were into place. So they want to make sure that they can use what's incorporated into the CUSMA regulations to have Canadian products. The determination of the country of origin to be declared must follow rules of origin that are outlined in the CUSMA agreement. These rules vary depending on the type of product. So to determine origin, the rule usually requires a tariff shift, which may also be accompanied, depending on the type of product, by a original value content requirement. A tariff shift means that the original product must undergo a substantial transformation, resulting in a change in its HS classification because it has become a new product. Let's say you have a good that's moving from chapter 72 to chapter 76. Well, that's a tariff shift that we can see. For certain goods, like I said, this transformation must also meet sometimes original value content threshold, meaning that a minimum percentage of material and production cost must originate from within the CUSMA region. There are a few exceptions, but this percentage is generally set at 50% of the product's net cost or 60% of its transactional value.
If a Chinese product is imported into Canada and then shipped to the United States, which tariffs apply?
So first scenario that we can see is if the product is only transiting through Canada, then you won't pay any duties in Canada. It will be imported inbound, and then you'll ship it directly to the US. Then the importer in the US will pay the US tariffs, which are, well, right now you have a 20% surtax for Chinese goods coming into the United States, plus all of the tariffs. So steel, aluminum 25%, or most favored nation tariff 7.5, and any other tariffs that the US has on Chinese products. Now, if the product is imported into Canada, so actually imported, then duties must be paid to Canada. When the product is later exported to US, duties must be paid again on the product's origin, China, when it enters the United States. But it might be possible to use the export drawback program if there's no transformation or substantial modification while in Canada, and if the export occurs within 4 years after the import, and proof can be provided that the product left Canada for another country. Export drawback program, meaning that you'll get back the duties that you've paid when you imported the product into Canada.
All right, time for your questions. So don't forget to use the Q&A button in Teams. Again, we'll do our best to answer as many as possible. If your questions concern a very specific situation, we might not be able to respond during this session, but please don't hesitate to reach out to one of our experts. We'll be happy to assist you individually. So, Monsieur Abdul.
Thank you, Geneviève and Pierre-Marc. That was very insightful. We have quite a few questions. I hope we have enough time to cover all of them. First question, as a non-resident importer of record, here it's a two-part question. If our product is CUSMA qualified, but our HS code becomes included in the tariff list, are we required to pay the tariff? That's the first part. Second part, if our product is part of the Chapter 99 exemption, should we replace the HS code with this code, or use both on the CUSMA certification of origin?
So I can do the first one if you want to and get the second one. So
Mhm.
even if your product is eligible for CUSMA, the 25% surtax, if it has US as country of origin and it is imported into Canada and the HS code is on the list of targeted products, you will pay the 25% surtax right now, even if it is CUSMA eligible.
And if your product is on the exemption list, you must on your document keep the original classification, but you must add the exemption on the documentation. So we need both pieces of information.
Okay,
So
thank you.
the normal HS code plus the Chapter 99 exception code.
Exactly.
Thank you for clarifying. Next question. If you pay your statement balance, is this good enough for CARM? Did you pay your dues basically?
That's a very good question. And unfortunately, the answer to that is no. Okay. The statement, you need to understand that right now this CARM portal is new to everybody. And for you, the importer, it includes all your history of transaction. So what we suggest to you is take a stock of what's in there for the last 90 days. Okay. Make your balance. You're going to see debit, you're going to see credit, but it's I want to say clear, but you can see there the payment that has been made either by your customs broker or you if you started to make your own payment. So you can do the calculation and see the amount that is due. So, and again, I want to go back to what Pierre-Marc said. We had very good capsules on the YouTube explaining how to reconcile your statement of accounts. So I strongly suggest that you spend a few minutes to see those capsules and then do the work. Go on your CARM portal, pull out the data, and then you're going to see the statement of account amount in there is not necessarily the proper amount that you need to pay. So there's a little bit of understanding the portal, the data on the portal that needs to be done there. Hopefully it answers your question.
Thank you, Geneviève. Next question from Sandra. For the HS codes, how many digits are important? Is it the first 6 that matter, or is it the entire 10?
The first 6 digits of an HS code, these are the international class. This is the international classification. So the first 6 digits are the same for all countries that are part of the World Trade, the World Customs Organization. So, and then you have the 2 1. So this position 8 and 7 and 8. These are the financial digits. So these are the ones that will determine what's going to be the tariffs or if they are eligible for trade agreements. And the last 2 digits, these are the for statistical purposes that they are put there. So 6 1s are international one. The 7 and 8, these are for finance, and 9 and 10, these are for statistics. When you declare your products, we need to submit the whole 10 digit classification in Canada. So we need the whole 10.
Thank you, Pierre-Marc.
Do you have anything you want to add on it, or?
Good answer.
I think you said it very perfectly. Okay, next question is, who's responsible for paying tariffs under FOB Incoterm? I believe here it's because we're saying we're tariffing countries, but in fact, who is paying in the end?
Well, usually if it's FOB, that's going to be the importer. And when it's FOB, the tariffs are paid by the importer in the country. It's not the seller that will be responsible for the duties in that situation. But again, in terms, I mean, you want to make sure that you have the right interpretation also with your seller. So these are technically legally binding terms, but sometimes people have different interpretations for them. So you want to be careful to make sure you understand. But FOB, that's going to be the buyer usually. That's going to be the importer also. And because the importer is the one responsible to pay duties, well, that's going to be the one that will end up paying the tariffs.
Maybe I can add a little something here, especially for the border between Canada and US. For years, there was no duties. So companies were not really paying attention on who was the importer of record. And even though there was certain Incoterms on the documentation, well, the Canadian entity often was responsible for it. So that's why it's really important that, yes, the Incoterm is correct, but also put on the document who is the importer of record.
Okay, thank you.
And last thing, if I can add on that, Abdul, is that sometimes even if you have Incoterms, I mean, you can have side agreements between the seller and the buyer to rebill a part of the tariffs afterwards. So these are specific clauses that you can have in your sales contract. So again, make sure you have these discussions beforehand. Don't just rely always on FOB, or any Incoterms. So.
Okay. Thank you for pointing that out. Another question from a non-resident importer. If a US company who's acting as the importer of record transfers its own manufactured goods to its warehouse in Canada, is the tariff on the manufacturing cost, so without profit, or is it on the eventual selling price, which comes with profit?
That goes with a transactional value.
Yeah.
I don't know if you want to go into details, Pierre-Marc, but there is specific rules about values in those cases. It's not some product that is ready to be put on sale. Is it just the transactional value between your company in the US and the warehouse? Should we refer to the valuation regulation, I think, for that?
Yes, we'll have to. And if the two companies are related, then you need to keep, I mean, you cannot artificially reduce the cost of your product. So you need to put a parent code on your transaction. So to see if the two parties are related or unrelated. And when the parties are related, well, the scrutiny is a little bit tighter to make sure that we don't try to bypass the correct value that could be used for the customs declaration.
Okay, thank you. How do we pay for our bond through Access? Will that be billed directly?
We'll send you an access invoice. So for the ones that we are doing, we are in the middle between you and the CERTI companies. So you will, yes, receive the bond application by the CERTI, but the invoice will be sent to you by access.
Okay, thank you, Geneviève. Are there any tariffs associated with non-tangibles from another country, like data or software or design?
No, this is not tariff. These are not tariff. Services, data, um, it's not tariff. No.
Okay, thank you, Pierre Marc.
But there are things though that are associated sometimes with the sale of goods, let's say royalties, that can be added to the when we assess the value of a good, but it needs to be with a physical good. So just to say that
Okay. And has the list of the 4,000 plus HS codes to be potentially tariffs as of April 2nd, has it been released by the government of Canada or not yet?
yes, it is available. It's also on the website of the Department of Finance. It's a list that is called under consultation, so it's not, let's say, official right now, but you can search it, you can access it through the links on the website of the Department of Finance. We'll share with you after the presentation a copy of the deck, and you'll have a direct link where to click and where you can see all the tariffs. It's not always super easy to find. I'll see if I can put it in the chat right now, if I can get it out for you, but it is there.
Okay, thank you, Pierre Marc. This is just to confirm about the crossing of the goods. The surtax is applicable based on the date that the cargo physically crosses into Canada, or from when a load is in transit prior to the implementation date. Will that be exempt if it's already in transit, or it's when it actually crosses the border?
Is there two questions? Okay, for the it will be applied when the good crosses the border. That's the
Okay.
first thing. I think there was a second point of your question.
No, it
If
was
it was
like
in transit,
if the tariffs will be applied as soon as the goods are in transit or when it crosses the border. So let's say the goods are in transit already and the truck only crosses after April 2nd. Will the tariffs be applied, or will this shipment be exempt from the tariffs?
I think that's part of the exception, Pierre-Marc.
Yeah, well, for the previous surtaxes that were put into Canada, so what was said is that if the goods were in transit on
Transit.
the date, uh, like when the tariffs were applied, then the surtax did not apply. So I can get the exact verbiage if you want, but I mean, if your goods were already in transit before the surtax was announced and applied, then you won't have to pay for it.
Okay, thank you. And a question from Julie. You mentioned if a product is from France, shipped to the US, then shipped to Canada, the origin still applies. How does this work for Chinese products that are shipped from the US into Canada and back to the US multiple times? Will the same product be tariffed multiple times in this case?
Well,
Unfortunately,
yes, yeah,
yeah.
yes. If it is always imported, then it's going to be tariffed back and forth. So yes,
Okay. And
But maybe,
last.
yeah.
Mhm.
yeah, maybe
Yeah.
Abdul, I can put a clarification here. So every time that we are declaring the information to customs, the duties will apply unless there's a code. We talked about exceptions earlier. So if, for example, you would decide to do a temporary entry into each or Canada, it's a trigger that suspends the payment of duties and taxes. So it's not something that on the documents, if it says, okay, it will be returned, no, you need to make sure that you want to do a temporary entry. You need to write it on the documentation, but it means that if it's temporary imported, it needs to go back to the country where they came from. So you need to have good paperwork in order. We need to know exactly when it crossed originally, have all the documents. So there is ways of suspending payments of duties and taxes, but it's not automatically.
Okay, thank you for clarifying that. We have one last question. What actions should I take if I know my competitor is using incorrect HS codes to avoid tariffs when importing goods to Canada?
I've been hearing this question way before surtax and things like that. Unfortunately, I don't know if there's a bureau of where you can report those companies, but legally you have to make sure that you are using the correct classification. I don't know, Pierre-Marc, if you are aware of another mechanism to report, but
No, that's a good question. I don't know if there are things for whistleblowers that
yeah,
want to report some things.
yeah,
Not something that we'll get into, but again, for HS classification, I know it's always open to interpretation what it is exactly. So sometimes the definition in French and in English can be different, and some can have different interpretation. But if they with intentionally use a wrong HS, then at some point, I mean, and especially now with CARM, the goal of CARM of CBSA, one of the stated goal is to make sure that they collect all the duties that are entitled to collect, and they will have much better tools to do data analysis. So hopefully they will go and look after the bad apples that we have. So most importers are good importers. They want to follow, respect the law, and there always could be some rotten apples in the basket. But I mean, that's part of the game.
That's true. Thank you, Genevieve and Pierre-Marc. That was very insightful. And we have one more question if we have the time.
Yeah, we have
It was
time for
just
one more.
posted.
Go. Yeah, go ahead for
Okay.
one more.
Can you confirm that the GST is calculated once the tariff has been added to the price of goods?
Geneviève?
yes,
Yep.
yes. GST happens at the end of the calculation for the payment of duties and taxes.
Okay,
Okay.
thank you very much. That's all the questions we have for today.
Thank you, Abdul. So before we wrap up, we know we've shared a lot of information with you today, but don't worry. I stated before, I'll say it again. So you'll be receiving a copy of the presentation, most probably before the end of the day, which will include helpful links to easily access the key information we've covered. So you get some links there, you'll receive that. On our website also, you'll find a wide selection of user guides and templates also for the documents we presented today. We've also created the video tutorials that we have on our YouTube account and also capsules that you can go look into. These will help you to navigate into the CARM portal. They're all free and we encourage you to check them out. And before we move on to the conclusion, I just wanted to add something that you've said earlier today, Geneviève, about the bound or at what we do at Access with your bound. So we take care, yes, of getting you the bound, the right amount for you, but we take care also of the annual renewal of your bound. So you don't never miss it. You're always up to date. So that's why it's great doing business with us because we take care of everything for you to remove pressure out of your shoulders. So Geneviève, up to you for the conclusion.
And just like that, we've reached the end of our presentation. So again, thank you for your attention and participation. As we mentioned at the start of the webinar, Access is proudly celebrating its 20th anniversary this year. For 20 years, we've been providing services in international transportation, Canadian and US customs brokerage, specialized in consulting and much more, and always with the same passion for supporting our clients. So to learn more, feel free to visit our website at accessinternational.com or give us a call. We'll be happy to connect with you. And on behalf of the entire Access team, thank you again for participating and your questions. We hope to see you again soon.